Welcome to this very special episode where we're going to be discussing deep into the Indian markets and what exactly is going to be the view for the next 1 year, the next 5 years, and the next 10 years. In the previous episode, I had given a very basic overview as to where the market is going to head in the next 1 year and what should be your strategy. But today, we are going to delve a little more deeper and we'll talk about a lot of mathematics, a lot of statistics, and a lot of knowledge sharing that's going to happen. Hi, my name is Advait. I'm the investment lead and founder of Sensex. So, like I mentioned in the previous episode, I had said that the markets are going to be a little bit more choppy and we need to shift into a multi asset allocation strategy. But today, we're going to be talking about something which is a little bit more interesting, a little bit more data driven, and also as to what exactly should our strategy be. And if you're our investor, please do listen till the end. And even if you're not one of our clients or investor, it's always useful to know more about where the market is heading. And this information is going to help you enhance your portfolio, or it's going to help you enhance your knowledge as well. So today I had a very interesting day. I met with this person. He is the chief investment officer of Franklin Templeton, and he gave a really nice presentation of where the Indian markets are heading. As a person, Mr. Janaki Raman is very empirically driven. He talks only when there is data backing to it, and also he does not theorize anything. So his judgment is what I really trust. And he showed us a very interesting chart today. And this is what caught my eye. So, the reason why companies grow is because of consumption. So, for example, if you take a travel company, so let us say that the Indian GDP or the sorry, not the GDP, the per capita income of India in 2018 was around $2,000. So let us say that an average household could afford basic shelter, basic necessities like food, clothing, and all those things, and also their kids' schooling fees, all their basic necessity, and they would end their savings with 2000. And usually, a lot of people did not have extra money to spend on luxurious things or any other things to do. But in 2032, what they are expecting is that the per capita income is going to double or even more than double. So that time what is going to happen, the status of upper middle class is going to double or even triple in the coming 10 years. So even now the per capita income has crossed $3,000 already. So people have already finished all their expenses at $2,000. They're still left with an additional of $1,200, $1,300. So what are they going to do? They're going to do things like buying more stuff, traveling, getting more fancy things for themselves, and consumption is going to increase. Just a small example, instead of using palm oil, they'll use safflower oil. Instead of going on a domestic trip, probably they'll go on an international trip. So the consumption is increasing. And as you can observe, especially in the Indian markets, you can see that people are spending limitlessly. And that spending culture has come very, very recently. And do you think this is going to settle in such a way? It's obviously not. It is going to increase tremendously. And the reason why this is directly linked with India is because the more consumption that happens, the more the companies are going to profit. And the more the companies are going to profit, the more earnings and returns you as an investor are going to get by purchasing their equity. So, in the same way, our economy spending is going to increase, 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 and by 2032, our economy could double in size and it will become the third largest economy just behind US and China. So that, folks, is directly linked with how your money is going to work for you. So as you can see, this data is extremely logical and is extremely believable. As you can observe that when your neighbor or some of your friends, they're always traveling, they're always spending on something lavish, the consumption keeps increasing. So that is one bet and one positive affirmation that every investor has to keep in his mind, is that India is going to become the third largest economy in the world. So it doesn't mean that it's going to be a constant linear growth like this. So let us look at a smaller time frame. Now let us look at what is going to happen in the next 5 years. So here he has shared another slide. So this slide represents the PE ratio, or in simple terms, how expensive the market is at that point in time. So as you can see, these are really sorry, the years are not visible. But anyway, this will be December 2015, 2014 and 2013. So during December 2013, there was a bit of a crisis in the Indian market. So the P ratio was below 15. And this, folks, was the right and perfect time to invest. And as you can see, if the P ratio is between the 19 and 15 levels, it says it's an optimal market. But as you can see, as soon as it almost touches the 19 levels, this was the COVID fall, and you can see that it has breached the point of 19. And this is where the market gets very overvalued. As you can see, 23 is where the market gets very expensive. And as you can observe, the P ratio has dropped along with the market, it has dropped. And again, it has touched the peak, dropped again, touched the peak, dropped again. And currently, the P ratio is actually overvalued. And this is where the mid cap space, the small cap space is going to get a lot of beating. And when I say a lot of beating, it does not mean that it's going to continue for the next 5 to 10 years, but it is going to happen that the slowdown of the economy or the slowdown in the performance of these sectors will reduce until the PE ratio comes a little bit down. So this is where, and this is the reason why, that at Sanzen, all our clients have a vast spread of mutual funds and stocks in their portfolio. So for example, in the previous video, I told that we need to shift to a multi-asset allocation strategy where they invest in all types of assets. And we need to follow something called as a multi-cap strategy, or just following an index fund is also a good habit. But this is where people who are going to invest lump sum, that means they're going to invest once and leave it, is where they're going to get a beating at this point. So this is where investors must be very aware of, and for the next 4 to 5 months, you need to stagger your investments and you need to go into a much more different kind of a allocation strategy. So this is what this chart represents. So as you can see that the elections are coming up, COVID was on the rise. Now, like I said in the previous video, it's completely gone. And now, once the election happens, it doesn't matter which economy or which government wins. It's going to be India's decade because of the level of consumption that is going to happen in the next 10 years, which is going to put us in the third largest economy in the world. And the policies right now are so strict that not even any government can change it in a matter of 1 or 2 days. It's going to take decades and decades and decades of hard work to even change the existing policies, which is going to slow down the economy to a very small extent and not at all going to affect the India's growth. So thank you for listening to this podcast. Please keep all the things that in mind, that are, it's just data driven knowledge and nothing is confirmed, because there are a lot of uncertainties that can happen. So my clients at Sanzen are exposed to a lot of diversification and a lot of inputs from my side. And if you are an outside investor, please do take my points into consideration, and you can always enhance your portfolio. And if you need to rebalance your portfolio or get your portfolio analyzed or start your investments, please do reach out to us at connect@sanzen.in or visit our website www.sanzen.in. Thank you.